Morning, guys. It's Monday, June 16th, 5:26 a.m. Central Time. Grain markets are mixed this morning. July corn futures down 4.25 at 4.40 1/4. July soybeans up 1/4 cent at 10.70. July Chicago wheat down 6.5 at 5.37 1/4. July Kansas City wheat down 5.5 cents at 5.35 1/4. July spring wheat down 3 3/4 at 6.30 1/2. We had some big biofuel news out on Friday. Big market mover. Let's start there.
So the EPA proposed raising U.S. biofuel blending targets. Under the new plan, total blending requirements would increase to 24.02 billion gallons in 2026 and 24.46 billion gallons in 2027. The targets represent an increase from 22.33 billion gallons this year. However, they do fall short of the 25 billion gallons recommended for 2026 by a coalition of U.S. oil and biofuel industry groups. The EPA's proposal also significantly boosts the biomass-based diesel blending target to 5.61 billion gallons, surpassing both the current quota of 3.35 billion and the coalition's 5.25 billion recommendation. Following the announcement, soybean oil futures climbed to their daily trading limit, and soybean futures rose to a 3-week high.
Let's go back to this. So for years now, we've been told that we're going to need to produce more soybeans in order to produce more soybean oil, in order to meet these biofuel targets that were going to be increased. And maybe we finally got the news that we're looking for here. This is not finalized stuff. There's a public comment period that will be open until August 8th. And then the EPA should finalize the mandates, I believe, by October 31st. But this looks very good. That 5.61, that's the target for biomass-based diesel. That's like a billion gallons higher than what was rumored. People were talking 4.65 and that it was going to be a dud and below what was needed. And 5.61 is seen as being very positive. So you're talking potentially record high biomass-based diesel volumes. And also another very positive item is the premium for U.S. sourced feedstocks. We've run several stories over the last couple of years about imported used cooking oil and how it's being used to make biofuel here in the United States. And the way that the carbon scoring worked, the used cooking oil from China, whether you like it or not, it had a lower carbon intensity score than soybean oil here produced here in the United States. Now there will be a premium as far as the RINs are concerned for U.S. sourced feedstocks like soybean oil. So it should, if this is all comes to fruition, it should kick that imported used cooking oil stuff to the side of the road and result in a lot more soybean oil being used. One of the stipulations that you should be aware of, and I'm not an expert on this, but that 5.61 is a projection based on what they believe will happen as a result of the RIN changes. And we'll get into that in today's premium video with Pete Meyer. He's going to join us to discuss this and the details and the impact on U.S. farmers potentially. But the soybean oil market rallied sharply Friday. We gapped higher overnight, and the rally is sticking. So it's pretty impressive stuff. Now, when you look at the monthly, soybean oil is still not very expensive. I mean, this thing was up to $90 at its peak in 2022, and that was a different world, granted, for commodities. But we've still got some room to run here, certainly, if this news is all reality, and it appears to look very good. Soybean futures rallied Friday. We tried to rally overnight and then kind of rejected what had been some multi-week highs. So we'll see if maybe the soybean market can call itself back. But this is very, very good news. Big picture. Does it mean that beans have to rally right now? No, but it's big picture good news. Again, premium subs. We'll have some stuff with Pete out later today, and we'll get into a little bit more depth here.
Israel and Iran remain locked in a deadly exchange of missile attacks. As of Sunday afternoon, the conflict had left 14 people dead and 380 injured in Israel. Iran reported 244 fatalities and nearly 1,300 hospitalizations. President Trump has reiterated that the U.S. was not involved in Israel's attack, but noted on Sunday that U.S. involvement remains a possibility. Israel, meanwhile, is urging the U.S. and European allies to join its campaign against Iran, arguing that international action is necessary to prevent the nation from developing a nuclear weapon. The escalating conflict sent energy markets soaring. WTI crude jumped approximately 7% on Friday, while natural gas prices rose nearly 3%.
From a geopolitical standpoint, is this the start of World War III? I don't know. The crude oil market is what we're discussing here in terms of the marketplace, and it did make some fresh highs in this WTI contract overnight. The August WTI traded up to 75.5 bucks, but then retreated and lost $4.50 from the highs. So there's a lot of volatility here. Looking at a monthly crude chart, I think we looked at this on Friday, but there was some trend resistance that was eclipsed and then rejected overnight the way that it would seem. So you're at kind of a key area with regard to crude oil. The Middle East, of course, a big producers, and they've got a lot of transport that goes on out of there. So crude oil is a good kind of barometer as to what's going on. Despite the rally in crude oil, we haven't been able to really follow along in terms of the grain markets at all. You look at corn lower this morning, wheat lower this morning, soybeans kind of independently higher because of the biofuel news. But the commodity complex, the stuff we watch at least, hasn't really been able to latch onto this.
Weekend rains were scattered throughout the U.S. Corn Belt. While coverage was spotty, areas of most major corn and soybean states saw some rainfall. The radar is active over North Dakota, South Dakota, southern Minnesota, northern Iowa, and southwest Wisconsin early this morning. An additional system sits over parts of Missouri and southern Illinois. Forecasts call for at least 1 inch of rain over most of the Corn Belt during the next 7 days. Corn futures trade lower to start the week amid a mostly non-threatening forecast.
It's non-threatening. There's just too much rain in too many places. You look at the 1 to 5, and then you look at the 5 to 10. It's pretty widespread. And I do understand that, you get out past that 5 or 6 day period, the forecasts become less reliable. I understand that, but this is all that we have to go off of right now. These forecasts, this is what the market is going to trade. So when you get a forecast like this with a bunch of rain on these maps coming into a Sunday night or Monday morning this time of year, corn futures are going to trade lower. Let's look at this through a different lens. Here's a map from our friends at Crop Profit. Over the next 7 days, based on the overnight GFS run, U.S. corn areas expected to see 137% of their normal rainfall, so plenty of rain. Even more rain expected during the 8 to 14 day period, 182% of normal rainfall expected. Now, there is some heat. We're going to run 5.6 degrees above normal across U.S. corn country on average over the next 7 days, and 2.2 degrees above normal during the 8 to 14 day period, again, based on overnight GFS data. The heat, I don't know, is a big problem because we've been lacking heat. The Corn Belt was 2 to 3 degrees below normal on average over the last 30 days. So I think a lot of people would tell you that the heat may actually be kind of a welcome factor here. So this is just a non-threatening deal, and that's why you come in with corn futures soft here on Monday morning.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about Friday's premium video?
5 Minute Friday, I did weather forecast reliability. How accurate are these forecasts? So to go back, we talk about all sorts of weather forecasts, throughout this time of year. And we do the same thing during the South American growing season. But what I did was I pulled some data from NOAA. I pulled some data from the Euro model stuff and talked about forecast reliability and how the reliability of forecast tends to become reduced, of course, the further you go out into the future. But I was actually able to put this into chart form and kind of visualize it for you guys. And I think it's an eye opener, and it shows just how important it is to watch the forecast this time of year because they can change so quickly. And there's kind of like a butterfly effect type thing where, if you see one little change on the front end of the forecast, it can drastically impact the back end of the forecast. Pete Meyer's doing Sunday night weather updates for us, did another one last night. It's a good primer to start the week. Hey, what's the forecast look like? What does it mean for the markets? Pete will join me again this morning, again, to discuss in detail the biofuel headlines that were out on Friday and the impact on U.S. farmers. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation. Nobody will try to sell you anything else. Just a ton of info direct from us every single business day, guys. Morning email goes out at 5 a.m. Central. Premium video goes out at 10 a.m. Central. We've got a text message service that you can jump on if you want to. It's optional. You don't have to give us your cell number. Support independent media, guys. We don't have sponsors. We're not owned by anybody. The only way that YouTube is possible and that the podcast is possible is through the premium subs. So premium subs, we love you to death. If you're not a premium sub, give that deal a shot this morning.
The funds increased their net short position in the corn market last week. CFTC released weekly commitment of commitment of traders data on Friday. During the week ending Tuesday, June 10th, large money managers were net sellers of 16,000 corn contracts. The net short of 150,000 contracts is the largest since early September. The funds were also net buyers of 467 soybean contracts and 7,000 contracts of SRW wheat on the week.
In the corn market, this is, it's a net short position, but it's not a huge net short position. This is just kind of I don't care about the corn market net short position is what I would call it. In soybeans, you've got a net long, but it's pretty small. And they probably added to it on Friday. In wheat, sitting short with no real concern there. Premium subs, you guys had the full versions of the fund tracker charts in your email this morning.
Brazil's harvest of its second corn crop continues to lag behind last year's pace. According to Patria Agronegocios, farmers have harvested approximately 5.6% of this season's crop. During the same week last year, about 14% of the crop had been harvested. The slower progress is primarily attributed to delayed planting and adverse weather conditions, which hindered crop development and postponed the start of harvest.
It must have been the more delayed planting because they haven't had a ton of rain. As a matter of fact, over the last 2 weeks, rainfall in most of your second corn areas has been below normal, with the exception of those areas a little bit further south. But I just don't see a weather problem here. Brazil's crop is going to be big. USDA calls it 130 million metric tons, which would be the second largest on record. Now, Brazil is still a pretty small corn producer relative to the United States, but they do export a larger percentage of their crop. The projection for old crop is that Brazil's going to export 33% of the crop, about 43 million metric tons. The U.S. projected to export only 18% of last year's crop, but that's 67 million metric tons. So the U.S. is still a much larger exporter, but in percentage terms, Brazil exports a larger percentage of their crop, and they're going to be pretty competitive from July through, call it the beginning of U.S. harvest on the export market. What did cattle prices do on Friday?
Cattle futures tumbled. Live cattle saw losses ranging from 215 down to 450. Feeders really took a beating, falling anywhere from 445 down to 545. Fat cattle trade was mixed last week. In the Texas Panhandle, cattle were $3 higher compared to the prior week at 235. In Kansas, cattle were mostly steady at 235. Up here in Nebraska, cattle were steady to $2 lower at 240 to 242. And then over in the Western Corn Belt, cattle were steady to $1 lower at 240 to 241.
Dow Jones is up 170 points. The S&P is up 28. Treasury's off a little bit. U.S. dollar is lower this morning. Was higher on Friday, I believe. Crude oil is now down 39 cents in the July WTI at 72.59. Was as high as 77.5 at one point overnight. Have a great week, guys. We'll be back on Tuesday